Hello and welcome to the Airline Weekly Lounge. I'm your host Gordon Smith, and this week I'm joined by co-host Jay Shabat to discuss the latest earnings and insights from Delta Airlines. Hey Jay, how's it going?
Great, Gordon. How are you?
I'm doing well. It's earnings season again. I can't believe it. It feels like we've only just wrapped up the last of the last season, and here we are. I guess we've had the laggards who have been trailing a little bit, and Delta's first out the post. Where do we begin?
There are still one or two airlines, I'm thinking of two in China in particular that haven't yet even reported their Q4 23 results. So here we are with Delta delivering Q1 24. So we got overlap here.
Does that mean that is Delta just handing in the homework early? Are they the future's pet?
Well, they do. It's quite remarkable. Delta, if you look at pretty much every publicly traded company in the United States, all the big ones anyway, with the big market capitalization, Delta's like number one. They go before anybody else. I think even J.P. Morgan, the banks tend to go very early. They're J.P. Morgan's going Friday, so we're by the way talking. We should say that we're speaking on Thursday morning New York time, a little later over in Europe. But Delta had just reported their earnings on Wednesday. So when I say JP Morgan is reporting on Friday, there's a little bit of context. Delta was even before that. But that's less important than the actual numbers here. So how did Delta do? In a word, they did very well as usual. Shouldn't surprise anyone. Delta's got quite a track record here. So to be specific, during the January to March quarter, Delta reported a 5% operating margin, 5%. And just a little for comparison's sake here, uh, a year ago, Q1 23, they did only 4%. So nice little improvement there, a point. Now they did fall short of the 10% operating margin that they did in the first quarter of 2019. Now I know there are some people out there that want to forget about 2019 and stop, talking about that. I kind of like to still take a peek and see how things compare. I know the world has certainly changed a lot, and very very different industry we're in now, very different environment. But for those of you who are interested, there was a the operating margin was cut in half from 10% to 5% between 2019 and 2024, and I can tell you why. And this pretty I could sum it up pretty quickly. If you look at the revenues, compare today, Q1 24 versus Q1 2019, revenues are 31% higher for Delta. Now, fuel costs, sorry, not prices, but fuel costs also up exactly 31%. Revenues up 31%, fuel costs up 31%. So why are Delta's earnings down? Well, here it is. Labor costs up 44%. So Delta is just paying, more for its workers than it was pre-COVID. I'm not sure they're terribly distressed about that. I mean, you'd rather be paying your workers than, paying higher fuel prices, I guess. So that's your reason right there. So I think I've given you a summary, and then we can get into a little bit more detail here.
Absolutely. You've delivered the gift, and now we're unwrapping the present, and we're going to unpack some of those themes, to use a terrible analogy. My apologies, Jay. Let's look at some of the key trends, because there is a lot to discuss here, so much so we're dedicating our entire episode to Delta this week. Listening to the earnings call on Wednesday, the mood music was pretty upbeat. Travel demand is robust. Is that your impression as well, Jay?
Yeah. I think the upbeat mood. I think that was totally justified. It was a good set of earnings, and keeping in mind too that this was the first quarter. This is the slowest quarter of the year. Remember, Delta actually gave some guidance for the second quarter, which tends to be second quarter is actually turning into the. It might just be the busiest quarter of the year. Now, traditionally, the third quarter was always the busiest because it included the real big summer peak when kids are off from school, people take summer vacations. But as Delta explained some of that demand has actually shifted into the second quarter because a lot of schools in the United States, particularly in the south of the United States, they go back much earlier, so they're back in school like early August. So people tend to now, kind of move their vacations earlier, and that's helping to boost second quarter. But that's not terribly important. What is important is they expect a very, very, very strong second quarter operating margin in the teens. I'm looking forward here. Yeah, here it is. Operating margin between 14 and 15%. So it's you mentioned that the sort of the mood music was good in the earnings call, and rightly so because demand is pretty. It's hard to find any blemishes really. I mean, premium is going great. Long haul is going great. The the loyalty program, tremendous amount of revenue flowing in between, Delta has a very important partnership with American Express, which they distribute, credit cards tied to Delta Sky Miles program. That's just, $1.7 billion in revenue just during the quarter, and they're working toward an annual goal of $10 billion. I mean, Delta's a
Woo-hoo.
50. Yeah, I mean, Delta. This is. I mean, that your reaction is totally justified there, Gordon. I think we need to all hoot and holler because it's quite impressive. Delta's a $50 billion company in terms of their annual revenues, and $10 billion is what they're shooting for here for annual revenues just from American Express, that partnership. Domestic, there were some concerns. Our domestic revenues starting to soften. We'll get a better picture of that when some of the low cost carriers, Southwest and whatnot, report. But for Delta, the numbers look great. I mean, unit revenues were up despite a small, increase in capacity. They said Asia strong. They said deep South America strong. If there's one blemish at all, maybe it's they did kind of mention that some of those Caribbean routes, short haul Latin America, think people taking vacations down in the Bahamas or whatever. That may be still a little bit weak. Just ton of capacity in those markets. So maybe if, like I said, that may be the only blemish. And then very interestingly, Delta also said on top of all of this that business travel is really starting to come back, and they're seeing it from some of these industries that were very kind of late to come back. Technology, for example, companies like Amazon, Google, those companies had really cut their travel budgets a lot in the past couple of years, since the pandemic, and they haven't really, gotten back to where they were. And Delta's now starting to say that even those guys are getting there. So yeah, it's happy story, all smiles on the revenue side.
Slam dunk, as you guys say stateside.
Yeah,
It's
yeah.
it's impressive stuff. As an outsider looking in, you always look for the blemishes, like you said. There's got to be some areas of weakness. So someone's going up, someone's going down, ins and outs, ups and downs, peaks and troughs, whatever you want to call it. It's
Right.
pretty strong across the board. I mean, the Delta president, Glenn Howenstein, he said the company had conducted a survey, and 90% of companies that responded intend to increase their travel in the second quarter. And you could argue that's seasonal, but that's still significant. And it really does set up Delta to deliver a really, really strong set of corporate revenues towards the latter half of the year. The president added that corporate travel sales were up 14% in the first quarter, with technology, customer service, and financial services industries leading the increase. Where do we unpack that, Jay? Is corporate back completely, or is this maybe just a bit of a pandemic bounce back?
Well, yeah, I don't think it's I think there certainly is some change in corporate patterns. I mean, I think there are people that are maybe combining leisure and business trips, and there's absolutely some people who are doing Zoom rather than calling. So but I don't think it needs to get back to 100%. Now, remember, there's a big difference between whether we're talking about volumes or revenues. Now, if you're talking about volumes, yeah, it's true. Business travel is probably I haven't Delta didn't give a number, and I don't recall any other airlines giving a number in recent quarters. But if you go back, 2 or 3 quarters, I remember carriers saying that business travel is maybe 80% back in volume terms, but 100% back in revenue terms because prices have increased. So I'm not sure that it's really even that much of a big deal if corporate doesn't fully come back. Now, of course, at the same time, the economy's growing, companies are growing, so even if a smaller percentage of employees are traveling, that's still, again, as population, the economy grows, that still may equal a similar number of people. So I think, yeah, I just don't think it's a concern that you know that there's, things have, there was this big concern. I remember Bill Gates during the pandemic, he was saying that, travel was going to be like half of what, nobody's going to travel anymore, everybody will just be on Zoom. And we should we should remember that with every new technology, people always say that people are going to stop traveling for business. The fax machine. Why does anybody need to travel anymore? Email. Why does that? Nobody needs to travel anymore. They'll just send electronic message, and then same thing with video conferencing. But I think the general rule is any technology that makes it easier to do business with people in other places will ultimately encourage more travel. So yeah, if you can, get more sales because it's easier to, Zoom customers and, on the other side of the world, well, chances are you're going to have a bigger business because of it, and you're going to have clients in more places because of it. So, yeah, it's a long-winded answer, Gordon. I apologize for that, but my, I think the bottom line is that it's not a concern.
Fears that the conference circuit would completely dry up and we'd all be shackled to our Zoom calls and our Teams calls was perhaps a little off the mark. To use Ron Swanson from Parks and Recreation, he loves bacon wrapped shrimp, I think. And the conference circuit, for its many failings, does tend to have quite good food. So maybe the allure of the hors d'oeuvres was too strong. Let's
Yep.
take a little look as well
People
at.
will go to conferences just for the shrimp cocktail.
Couldn't possibly comment on our global listenership, but I'm certainly partial to a little vol au vent or a canapé at the end of a hard day. Let's take a look at the Amex deal, Jay, because for maybe our listeners who aren't quite so familiar with the US credit card scene, this is just a complete other universe. You'd be forgiven for thinking, right, this is an airline that gets people from A to B. What on earth have they got any interest in selling people credit cards, never mind branded credit cards? Can you just unpack it for listeners who are maybe not quite so familiar with the concept, and then we can look at some of the reasons why Delta's partnership with American Express in particular is so lucrative.
Sure, yeah, and this is an entirely a U.S. phenomenon, and it's because of some just very unique laws about interchange fees that credit card companies can charge and things like that. It's very very unique to the U.S. But essentially, what happens is a company like American Express or a bank like J.P. Morgan or Bank of America or Citi, they have these credit card businesses, and what they find is that the best way to get people to use their credit cards is to reward miles, and they're just getting miles is so popular. So if if you look at a Citibank card, well, we can use American Express. If you look at American Express, their credit cards, the reason why they're so popular is because people can earn Delta miles. So American Express is willing to pay Delta a fortune for that privilege, and it works for everybody. I mean, American Express loves it because everybody used their cards. They, make money off of that. And then of course Delta loves it because of all the miles that they can sell. And yeah, it really, and it works for, I mean, all the US airlines pretty much. I mean, all the sizable ones have a major credit card program. Now for United, Delta, American, and even Southwest, because their networks are so large and the utility of their, where they can get people is just so vast, the that's where you start to get just these crazy, these crazy revenue totals, these crazy income totals. So that's a bit of background. I mean, very very important. And not only, I mean, you can go however deep into this topic as you want, but I mean, even during the COVID crisis, one source of funding for these very distressed airlines was going to the credit card companies, the banks or American Express, and saying, "Hey, look, can you help us out here? Maybe we'll sell you some miles in advance and give us the cash. We need the cash right now." And we saw that repeatedly. We also saw that during the early 2000s when airlines were going through bankruptcies and stuff. So, yeah, very important player, financial player in the ecosystem for airlines. Certainly true for Delta and Delta's Amex. If you look at the big four credit card relationships, so Delta Amex is probably the strongest one. Now, United recently renegotiated their deal a couple of years ago, I guess, with J.P. Morgan Chase, so they have a really good deal. American actually has a strange situation where they have two separate deals, one with Barclays and one with Citi, and that just dates back to when American merged with U.S. Airways. A little history there, but American has actually said repeatedly that one of the reasons why their profit margins, are routinely underperforming Delta is because their credit card deals are not as good, and they kind of hinted that they're now talking to Citi and Barclays about that. So look for sometime perhaps in the next year an announcement. Hey, American says, hey, we renegotiate our deals with this bank or that bank. So there's that, and then I think I mentioned United. The other big one, Southwest, they also have a deal with J.P. Morgan Chase, and that's extremely lucrative for Southwest as well.
Unreal numbers.
Yeah, no, the
And
numbers
yeah,
are extraordinary. And you're talking about, and sorry, I just was going to say, like, the number of just not necessarily the people who hold these credit cards, but if you just look at the people that are members of these programs, I mean, it's just crazy. I mean, they used to be a little more transparent about this. I haven't seen any recent numbers, but I wouldn't be surprised. And if someone from Delta can correct me on this if I'm way off base, but I wouldn't be surprised if there are something like 200 million Sky Miles members. Remember, there's only 340 million people in the entire United States, and that includes babies and that. So it's people don't travel. So
I've got this image of a toddler swiping the credit card to get their bottle.
yeah. It's probably not too far from the truth considering the numbers here. But wow, I mean, just these numbers are just crazy large.
I can help you with a little tidbit in terms of your mission to find out how many people use the card. Some reporting from our colleague Megna during the week for Skift said that CEO Ed Bastian, that's Delta's CEO, of course, he previously told investors that around 1% of the US economy is spent on Delta's credit card, which is just mind blowing to an
Mind-boggling.
external pair of eyes.
Mind-boggling.
Absolutely.
Oh yeah,
Jay,
mind-boggling.
so much more to discuss. We are going to continue this conversation into part two, look at some regional flying and also some of the broader prospects for Q1 for other airlines across the United States. Don't go anywhere. We'll be right back after this very short break. Hello and welcome back to the Airline Weekly Lounge podcast. I'm your host, Gordon Smith, and this week I'm joined by co-host Jay Shabat. We've been discussing all things Delta, and we're going to continue discussing all things Delta because there is so much to discuss, Jay. We were just touching there before the break on the American Express partnership and just how lucrative that can be. One area that historically has been not as lucrative, to put it diplomatically, shall we say, is regional flying. And that's really struggled a bit since the pandemic due to the pilot shortages and some other sort of macroeconomic trends. But Delta mentioned during their earnings call on Wednesday that they want to get back into the regional flying scene and maybe even fully restore the network that they had pre-pandemic.
Yeah, that's right. And that's pretty much the one part of the network where the utilization rates for the fleet are really not back to 2019 levels, and they hope to get it there. They interestingly enough, I believe they said wide body utilization rates are now ahead of 2019 levels. Now, when you get in between on the narrow bodies, I don't think they're quite there yet, but they're pretty close. Now, Delta does have those, sorry, I'm skirting around your question here. I promise I'll get to it, Gordon. But I just wanted to mention that Delta does have the A321s with the Pratt & Whitney geared turbofan engines that are giving everyone headaches. But it doesn't seem to be nearly as much of a problem for them as it is for perhaps Spirit or a JetBlue, some of the smaller airlines. And that's in part because Delta has their own, in-house maintenance team, and in part because Delta is just such an important customer for Pratt and Whitney and for Airbus that they perhaps get a little bit of preferential treatment when it comes to maintenance resources and whatnot. So I just wanted to make clear that overall, Delta is not having nearly the kind of supply side problems in terms of like getting fleet in the air and labor shortage as some of these other like low cost carriers, for example. Now, but they are, as you kind of alluded to, Gordon, they are experiencing some of that more on the regional side, and they said that over time they're going to get that back up and running, and that will help them, do even better. So, there you have it. Now, Delta has, without going into too much of the details of the Delta network, they do have a lot of shorter stage, kind of smaller. It's just kind of the nature of the southeastern part of the United States. There's a lot of kind of smallish, medium-sized cities. If you picture like surrounding Atlanta, the Birminghams and Jacksonvilles and Jacksons, and there's just Savannahs. There's just like a lot of those kind of cities, Charlestons, and what they've been able to do is they've been able to use these small narrow bodies like the A220. And they, prior to that, I think they even still have 717s. These are very small narrow bodies where you're starting to even overlap with in terms of size with what you might consider a regional jet. So, in that sense, they kind of they're able to cover their bases on some of the smaller routes that way. So I don't think it's maybe as big of a problem. American has talked a lot about how their regional network is just extremely important to them, but not yet optimized, and it's probably less of a problem for Delta than it is for American. Let's put it that way.
Yeah, I think that's a fair assessment, Jay. And the Delta president on the earnings call Wednesday said they had a total of 100 regional jets that are either underutilized or not in service. So they've got a little bit of wiggle room to get those planes in the air once they can get labor and other elements in place. Let's move on, Jay. Let's go south of the border to Aeromexico, because that you'd think were sort of fairly natural bedfellows, both in the Sky Team alliance and complementary networks. But they've run into some issues with regards to how close Delta and Aeromexico could get. A bit of a standoff with the DOT. What can you tell us about that?
Yeah, well, not a whole lot other than as you said, the regulatory, the U.S. regulators have kind of looked at that and sort of raised concerns about it being non-competitive. I mean, they haven't issued anything binding yet, and Delta says they're discussing the matter with the relevant regulatory authorities. So we'll see where that all goes. Interestingly enough, like Latin America, the bigger priority for Delta is their joint venture with LATAM, which they are growing very fast. They not too long ago, maybe was it 2 years ago, that they received antitrust immunity for that. And they've been adding a lot of new routes between, for example, Brazil to Atlanta, Brazil to Florida, Brazil to New York, things like that. So I would say that that's more of the priority, looking down to Latin America. And I guess the only other thing I would say, reverting back to Mexico, is that it is a very interesting market because the Mexican economy is in a quite an advantageous position now with supply chains being rebuilt. Previously, a lot of U.S. companies uh, sourced a lot of their production in Asia, China, for example, China primarily, and a lot of that is moving to Mexico now. So you see this huge boom in places like Monterrey, Mexico, for example, where Tesla wants to build a factory, and even interesting enough, even the Chinese car manufacturers are now moving into this region. So that's a potential area of growth if the economy does really fulfill its promise down there. But again, I wouldn't put that very very high on the list of things that Delta's looking at.
They do have their finger in many global pies.
For
Even
sure, for sure.
even speaking as a European, their investment in Virgin Atlantic
Yeah.
and plenty of others. Let's touch very briefly, Jay, and just give our listeners a little preview, if we can, looking at the other Q1 earnings that we're expecting over the next few weeks. Delta first out the gates, as we've said. but we've got the other US majors following suit in the next fortnight. If you had to get your crystal ball out, what are your predictions?
Right. And it's always, Delta being always the airline that goes first, it's you always have to ask the question, to what extent are their results representative of what's to follow of everybody else in the US? And the answer is probably, even more so now than in earlier times, probably not very representative. We'll see how United does. Now, United has the closest kind of, let's say, situation to Delta, in the sense that they do have, high exposure to a lot of these booming markets, the premium, the intercontinental, the big loyalty programs. So you would expect them to do somewhat well. Now, keep in mind the first quarter does tend to be rather rough for United. Their network tends to be very east-west oriented, so they're a little different than Delta in that respect. So I suspect, I think I wouldn't even be surprised. I'm not sure if did they give guidance? They may have even said that the first quarter is going to be loss making. If I'm imagining that, perhaps I am. Then let me just say that I wouldn't be surprised if the first quarter is loss making for them. But I do expect them, if trends continue, to have perfectly good second and third quarter. Now then you get into American. What are they going to report? Well, American, they don't have as much exposure to some of this intercontinental strength that we've talked about, and so they've been kind of lagging Delta and United in recent quarters, and you kind of expect that to not too much change there. And then another huge question is, how are these low cost carriers, these struggling low cost carriers like Southwest and especially Spirit, but also Frontier. These carriers all had very, very disappointing years in 2023, and is that going to continue into 2024? Hard to say, but it's there's some fundamental realities that are still with us, that are still burdening these guys. I mean, one being that there's this. Now, remember, more so than a Delta and United, a Southwest or a Spirit or a Frontier, their business models depend very heavily on growing rather rapidly to create the economies of scale, which in turn reduce your unit cost. That's a very essential part of these low cost carrier business models. But when Boeing is not delivering your planes on time, or when Pratt & Whitney has got your engines in the shop, so you've got 50 planes on the ground that you can't fly, it becomes much more difficult to grow, much more challenging from a cost perspective. And then, of course, going back on the revenue side, you don't have flights to Paris in first class that you can monetize right now. So I suspect that the challenges remain for these LCCs, but we shall see. And we don't have very long to wait, do we, Gordon? Only a couple of weeks.
No, we don't. No, just next few weeks. And we'll, of course, keep you updated both on the Airline Weekly Lounge podcast, but also the Airline Weekly issues. We will keep you abreast of the latest developments there with Jay's frankly unmatchable analysis. And you were absolutely right, Jay. United did forecast a first quarter loss back in January, largely attributable
I wasn't
to
imagining that.
No. It seems like absolute eons ago, but yeah, that was attributed at the time to the Boeing 737 MAX 9
right.
grounding. Got it. Okay,
Yes.
we're clean out of time, I'm afraid, Jay. I told you Delta would do as both parts, and it sure did. Don't forget, you can always contact us via email. My address is gs@skift.com. That's G for Gordon, S for Smith, and Jay can be reached via js@skift.com. That's J for Jay and S for Shabat. My thanks to Jay for joining me this week, and wherever you are in the world. Thanks for listening, and we'll catch you next time. Bye for now.
Thanks, everyone.
Thank you for joining us for this week's episode of the Airline Weekly Lounge podcast. Check out airlineweekly.com for a new issue every Monday and updates on the latest airline news throughout the week.